Hey guys, welcome back to the channel. So today I'm going to be introducing you to the first video in what will hopefully be a series of videos about investing. As this is the first video about investing, I'm going to be talking about a very common but somewhat overlooked option to building wealth, and that is ordinary shares. Now I understand that a lot of people's opinions about shares are that they're very risky, which they definitely can be without the proper research and reasoning behind investing in them. I've even heard people comparing them to a Sunday night at the pokies, which I don't really agree with. However, with the proper due diligence and analysis of the companies you're investing in, they can be extremely rewarding. Now, because so much can be discussed about shares, I'm just going to try to give you guys a brief overview of what investing in them entails, the benefits, the downfalls, and how easy it is to get started. So to start off, what is a share? Well, a stock or share represents a part ownership or share in a company. Now, this company may be publicly traded or privately owned. For simplicity's sake, we're just going to talk about publicly traded stocks. So in Australia, these stocks are traded through the Australian Stock Exchange or ASX using tickers, which are these three symbol codes used to identify the companies on the exchange. Some companies you may know would be Commonwealth Bank of Australia or ticker CBA, BHP Billiton, the big oil company, ticker BHP, coincidentally, or Telstra, TLS, which is obviously a communications and phone line company. So you may be wondering, what are the benefits of investing in shares? Investing in shares can be very beneficial in both the long and the short term, depending on your ability to analyze the companies and markets. Short-term investing is generally a riskier practice than investing for the long term. Now, stocks can provide returns in the form of income and in the form of capital growth. Income returns are called dividends, which are distributed by companies to their shareholders at the company's own discretion. Now, dividends represent a share of the company's profits. So for instance, if company XYZ makes $1,000 profit for the 2019 financial year and decides to pay a dividend of $10 per share and you own 5 shares, then the company will pay you $50 for owning those shares. Growth returns are also referred to as capital gains. Now, growth returns are pretty self-explanatory. If the market value of a company goes up, generally so too does the price per share in that company. So if you buy shares in company XYZ, look, as you can see, I'm not very imaginative with my company names, but if you buy shares in company XYZ for $10 per share, and a year later the price per share in that company increases to $15, due to raised profit margins or expanding operations, then you'll have an unrealized capital gain of $5 per share, or 50% on top of your original investment, which you'd be pretty happy with. So you may be wondering, what are the downfalls of investing in shares? Well, shares can be quite volatile. They can go down just as quickly as they can go up. People tend to lose a lot of money on shares because they do not do sufficient research in the companies they're investing in, or do not have a great understanding of the economic environment as a whole. In my opinion, there really isn't any downside to owning shares in a company other than the possible loss of capital and the illiquidity of shares in comparison to cash. However, as stated before, if you're confident in your own research and analysis of the companies you're investing in, then you'll be far less likely to experience any large losses of capital and will generally receive a better return on investment than you would with cash or fixed interest assets. So how do you get started? Opening a new account to buy and sell shares is just as easy as opening a new bank account. There are plenty of online brokers that provide various tools, forums and research such as CommSec, CMC Markets and NabTrade, just to name a few. Personally, I like to use CommSec because I enjoy their interface and their interactive tools. However, you can Google different brokers to understand their fees and get a look at their interface, their tools, and their research. When you decide which broker is right for you, you just need to make an account and go through the setup guide to get you started. Once you have an account, you can buy or sell shares as you please. You can put in an order at market price, which will generally be completed straight away, or you can specify a price, which may take a bit longer depending on how much the specified price varies from the market price of the company you are trying to buy or sell. The cost of putting a buy or sell order in can vary quite substantially depending on the size of the order. So make sure you understand the fees associated with trading shares before you go on a share shopping spree. Said that right? I know I didn't go into too much depth about shares in this video because you'd all probably be asleep by now, if you aren't already. But if you want to learn a bit more about shares, there are plenty of websites out there that go into a lot of detail, but feel free to send me an email with any questions or write it in the comments below if you want to learn a bit more. I'll be putting out more videos in the future about shares as part of this investing series, but for now, thanks so much for watching. Please like, comment and subscribe if you enjoyed the content. Thanks.